Welcome everybody. See some of you guys are streaming in. Welcome in on a Tuesday evening. I hope you guys are keeping nice and safe while on MCO or CMCO to be more precise. If you guys can hear me, just love to add some. If you guys hear me loud and clear, can you just comment below that all is good before I load this up? There we go. Okay, so if you guys can hear me loud and clear, just comment in the section below. I hope you guys can hear me loud and clear. Good evening, KP. Good evening, Wendy. Darren, good evening. Daniel, good evening. CM Tang, good evening. Right. Let me kind of just add my guest to the stream here. Kenny, welcome. Can you hear me? Kenny, can you say something?
How about now?
Yep, perfect.
Okay, good.
Yeah, perfect. All right, cool. All right. All is okay. Good evening to everybody. Okay, welcome to our Singapore Tuesday segment of ET Copy Time. Today we have a very special guest, Mr. Kenny Loh, which I will introduce him in a while you guys are still streaming in. For those of you who joined us over the weekend for your portfolio class, where we did it live over Zoom, I hope you guys are enjoying it. And some of you who did the back test were quite surprised at what could be done. I guess what is interesting is could we do the same for REITs, for example? All right, so before we get started, let me just quickly share my screen here. Let me just kind of present. Okay, so tonight we're going to be talking about, tonight is Singapore Tuesday, so tonight we're going to be talking about SGX REITs, okay, what to expect, and we have an expert here, Mr. Kenny Loh, who is going to be introducing to us in this hour and a half or hour-ish segment that we're going to be having with you. I hope you guys are home safe. And we understand up to, I think, on Thursday, most of you guys will have to be working from home. So don't forget to tune in to Copy Time at 8 p.m. We are live to you every Sunday till Thursday. Okay. Before we continue, just a very quick disclaimer. So this is purely for educational purposes only, and it's not meant to be financial advice, right? So tonight's segment is really to introduce all of you guys to what Singapore REITs can do. As you all know, Singapore REITs market is much larger than the one we have here in Bursa Malaysia. But Bursa Malaysia, right now we have about 18, soon to be 17, because one will be taken private. And considering across the causeway, I think they have more than 40 REITs that are listed, so they are quite popular over there. So for those of you guys who have a lot of money stashed away in Singapore and you've put in the fixed deposit, and you might be thinking, how can I get better returns than letting my money sit there? Perhaps REITs could be your answer in a very low interest rate environment. Of course, this is a disclaimer, not financial advice. Okay, so if you want financial advice, speak to your financial advisor. Now, just some housekeeping, just to keep all of you Genius subscribers updated. This coming Saturday at 3 p.m., we have Mr. Davis Cheong, the CEO of SolarVest. He will be on on ET Online Club. So for you club members, you should tune in at 3 o'clock. Anyway, we're all locked up at home anyway, so might as well hop on your computer and listen up. So Mr. Davis Cheong, so last month he came, that was done in Mandarin. So this time it will be done in English, right? Now, a day before that, right, we actually have a very special company. So we have 3 representatives from this company, Mr. Leong Hon Chong, who's the executive director, Mr. Gary Yu, who is the CFO, and Mr. Alan Yong, who is the investor relations representative, managing partner of Vision Engage. This company we will be talking about is actually Well Call. rubber hose manufacturer. So for those of you who have access to the Equities Tracker and Genius subscription, do check out their financials, right? They will be coming to talk to us about what's happening and give us an update on the company. So this is a company we covered back in 2011 way back before that, in 2009 or 2010. We covered Wellcorp. Now, please note that this is on Friday at 11 a.m., right? So this was the best slot that we could get them on with us. So it's 11 a.m. So please take note and put in your diary. So we have 2 back-to-back club meetings, one on Friday and one on Saturday. Okay, for those of you who are new and just joining us, don't forget, if you want access to, you want to be informed investor, you can check Equities Tracker out, absolutely free for 2 weeks. All you have to do is go to equitiestracker.com/free, and this will give you access to our platform absolutely free. All right. Now, Kenny has very generously agreed to share some of the slides that he will be sharing tonight. So if you want to download these slides, don't forget to save our WhatsApp number at 603-8408-2070. You can download his slides tonight under number 4, copy time freebies under Singapore. So option number 4. And you get a list of things there. Now, you will also see that we have added a couple of things. There's actually an SGX Telegram group. So this is by SGX, so you can join absolutely free. You can also get access to research reports, CEO interviews, and also any market updates, right? So if you want details on those, do check it out via our WhatsApp at 603-8408-2070. Now, for those of you who are very interested in the Singapore market and you like to follow us, don't forget, we also have a Facebook group which is absolutely free for you to join under ET Online Campus SGX. So just search for it. We'll post some comments below. So ET Online Campus SGX. Okay, so do search for it. That's something that we have. For those of you who are interested and still have not have a broking, so this is what I was talking about, analyst research, your invest resources. Now, of course, some of you guys who are watching on mobile phone, there is absolutely no way you can take a snapshot of the QR code, but you can now get it through our WhatsApp at 603-8408-2070. Now, for those of you who have yet to set up an online trading account, just to make it simple for you guys, you can also these are 2 brokers that are pure online brokers, so you can set it up via the internet. So Tiger Brokers, which is relatively quite new, and of course Philip Securities, who has been also on our show a couple of times. These are the rest of our Malaysian brokers who will also be able to facilitate your trades on the SGX as well. Of course, these are all the numbers. So if you want, you can just take a snapshot or take a screenshot of this page, and you can contact the relevant person. So we've actually summarized it all for you guys. 840-82070. Did I type something else wrong? 840. Oh, sorry, it's 840-82070. So I need to amend my slides. Apologies on that. All right. Now, so I'm gonna get started and introduce Mr. Kenny here. Kenny, now just a brief one. So Kenny is actually a senior consultant and a REIT specialist of Singapore's top independent financial advisor. He helps his clients construct diversified portfolios consisting of different asset classes, from REITs to equities to bonds to ETFs to unit trusts, private equity, alternative investments, and fixed maturity funds to achieve optimal risk-adjusted returns. Okay, so Kenny is also a certified financial planner, certified IBF trainer, and associate of the REIT Investment Advisor. He's also a registered speaker with the SGX Academy and the REIT Symposium and Invest Fair. Okay, so Kenny, welcome. Thank you very much for spending your evening with us here. Welcome to the show. Okay.
Okay, thank you, Alvin.
All right, cool.
All right. You cannot hear me.
Yes.
Can you hear me? Okay.
Perfect.
Good. So far, sound good. Sound check and also slide check. Okay. Okay. Good evening, everyone. I'm Kenny Loh. Okay. Now I'm going to show my slide. Elvin, can you share my slide?
Yep. Just did that.
All right. Okay. Yep. Let me turn. Okay, you can see my mouse over here. All right. Okay. Today's topic I will share with every one of you on how to diversify your investment portfolio with Singapore REITs. Okay, so the usual disclaimer apply. Just a brief introduction. Just now, Elvin has spoke about it. I'm the certified financial planner and also a REIT specialist from an independent financial advisory firm, and this is my full-time job. On a part-time basis, I am also the Adam Khoo Learning Technology Group as an investment coach, SGX academy trainer, and also a certified REIT trainer from IBF. This is my website. You can go to my website to read my monthly update on the REIT analysis itself. All right. Okay, beside that, I'm also invited as a panelist and also the speaker at various financial events, example, REIT Symposium and also Invest Fair held in Singapore. So if you love the Singapore REIT itself, this is an symposium I would strongly suggest all of you to attend, because this is a place that where we can have a face-to-face, so-called very close up and personal, that kind of sharing on the different REIT itself. Okay, beside that, these are the trainings, workshop, and also seminar interviews I have conducted over the years. Right. So without further ado, today content I'll be focusing on these key three topics. I will give everyone an overview of the Singapore REIT industry, and also what are the reasons why Singapore REIT is a good investment choices, and also lastly, what are the investing opportunity for the Singapore REIT.
Yep.
Overview
So
of
if you guys have any questions, just comment in the section, and then we'll sort of come to the Q&A. I think Kenny is quite flexible to answer any questions that you guys have as well, right? As and when you guys have it.
Right, sure. Okay, I give an overview of Singapore REIT industry. Okay, basically REIT is not new in this part of the world. If you are very new to the REIT itself and you do not understand REIT as an asset class, you do not really need to worry about that. Actually, REIT first started in US since 1960. He has gone through many financial crises and bear market itself, and REIT is still doing pretty well for the time being. All right, and the REIT first listed in Singapore in 2002. The first REIT listed in Singapore is actually Capital Mall Trust, which owned by Temasek. So it has been about 18 years now. So REIT in also Singapore is also not new. Now it's coming close to 18 years or 19 years. Right, moving forward, REIT will become more and more popular in this part of the region, because at the present moment, China and also India, they are coming up their own REIT and to be listed on their own stock exchange. At the present moment, the market capitalization for Singapore REIT in Singapore is 100 billion, and this represents about 12% of the SGX market capitalization. All right. Okay. Later, I will share with you a table to see how big is this 12%. All right. It may be very big for some country. It may be very small for some country. Okay. And the other thing is currently we have about 44 REIT and also property trust listed in Singapore Stock Exchange. And we are having the second largest REIT market in Asia. Over the past 10 years, the market capitalization compounded annual growth rate is at about 15%. This is a table to show that the relative position on the REIT market in different stock exchange. As you can see from here, US at the present moment has the world largest REIT, close to 1.2 trillion. In terms of the percentage of a stock market cap, is only 3%. Right, you can see that it's not very big. And Japan actually at the present moment is the largest in Asia, 155 billion, only represent 2%. For Singapore itself, the REIT market cap is about 100 billion, is close to 12% of the market cap. So in short, REIT is quite an important asset class listed on the Singapore Stock Exchange, and also a major component in the STI index. This is an compounded annual growth rate for the market capitalization. As Singapore want to become a regional hub for the REIT sector, so it is a commitment for SGX and also MMX to continue to grow the REIT in Singapore. That's why you can see that actually the growth rate is pretty healthy, and moving forward, we are expecting the growth rate to be double digit in the long term period.
So Kenny, just to clarify, this is the growth of new companies as well as existing REITs that have grown in value over time.
Right, that's right.
Okay, so this is not representative of 15% investment return CAGR, right? This is just the growth of the market, right?
Yeah, it's a market cap. It's a combination of how big the existing REIT continue to grow. At the same time, there are new IPO coming into Singapore.
Right. Okay.
Right.
Got it.
Okay. Good question. Continue. Just ask if you have any question. Right.
I'm gonna ask on behalf of all the viewers here, so bear with me if the questions are a bit annoying, all right?
Yeah. No, I like that, because so that I can have a feedback, so that I know where to slow down and where to really need further illustration. Because some of the slide here, it can be quite technical, and if you have any question, just feel free to ask on behalf of all the listener.
Okay, thanks.
Okay, so although the REIT is listed in Singapore, not necessarily the REIT itself having 100% of the property in Singapore. Right, at the present moment, if you look at the pie chart itself, and there are only 6 REIT out of the 44 have 100% property in Singapore. Okay, that means the remaining 38 of them actually they have an overseas exposure. So in short, investing in Singapore REIT, you enable you to also own the overseas property. Some of the property in Europe, some of the property in Australia, US, so on and so forth. Okay, so it's pretty diversified. Okay, on another hand itself, investing in REIT not necessarily just invest in the residential. The industrial and also the sector is pretty diversified. We have close to 18% of the industrial REIT, 14% of hospitality REIT, which comprises of a service apartment, service residential, and also those hotel is under the hospitality REIT. And we also have a diversified REIT, which comprises a combination of a commercial office and also the retail mall. Of course, retail mall about 23%, office we have a 16%, specialized REIT referring to all those data center. Okay, the new growth engine in the REIT sector, about 2%, is still a pretty small segment. But at the present moment, I am seeing that actually the data center is getting more and more popular in the industrial sector. All right, and also we have about 7% from the healthcare REIT.
Kenny, just for for the benefit of some of our viewers here, what is the main difference between a property trust and a REIT, because they are both listed as well, right?
Yeah, both listed itself. Basically, the structure itself they are different. Because the property trust they follow the business structure. For the REIT itself, there is a typical REIT structure in Singapore, and the tax treatment they are different.
So is there a pros and cons between the two?
I would touch a little bit on that, on the pro and cons.
Okay, right? Cool.
There are certain rules Singapore REIT have to follow, but the business trust they do not need to follow those rules.
Okay.
All right. So this is just a pan Asia exposure, right? You can see from here this summary table showing that there are 4 trusts have the exposure, the property exposure in South Korea, 2 trusts in Hong Kong, 6 in Malaysia. Majority, of course, they are in Singapore, 1 in India, 10 in China, 7 in Japan, 2 in Vietnam, 1 in Philippines, and also 3 in Indonesia. Basically, it's quite well diversified and also well covered in the whole Asia itself. All right. So for those Malaysian, if you want to invest maybe Japan, right? Invest Japan, you don't need to physically go and fly to Japan and invest in the Japan property. Basically, you can choose some REIT, have the exposure in Japan, then you have already access to the Japan market.
So is this just curious, which means in the slide just now, so you have Malaysia's 6 trusts, which means that out of the 40 plus trusts, 6 of them actually have exposure in Malaysian real estate. Is that right?
Right. That's right.
Okay, so that means one trust could be also in South Korea, Hong Kong, Malaysia, and Singapore, and they will be counted as 1111 for each, right?
Yeah, maybe one of the trusts they have 2 property in Malaysia, right?
Yeah.
And they're calculated as a one because it's based on the trust.
Sorry. Okay, got it.
Okay.
Got it. Cool.
Okay. And over the years, you can see from the growth here, when we back to 2012, we only have 28 REITs in Singapore, and about 10 of them have 100% of the exposure purely on Singapore. But you know that Singapore is pretty small. Over the years, whatever good property, premium property, which need to be REITed or already REITed, we don't have a lot of good property to left over to be REITed. So in order for the REIT to grow, right, in terms of market capitalization, to increase their dividend yield, they have to go overseas. So when they go overseas, they need the size to compete. That's the reason the size, the market cap has to become bigger and bigger. So over the long term, you can see that actually there are more and more Singapore REIT itself. They have changed their mandate to include all the overseas property. And that's the reason that actually there are a lot of merger and acquisition going on during this time period, this COVID-19 period.
Okay.
Okay. Now this one, Alvin, probably you will be interested. This is a total return. All right. So if you look at the chart from 2012 until today, basically over the long-term period, we have close to 250% growth, total return. That means that beside the price, they also have a dividend add up together close to 250%. And actually during this COVID-19 pandemic, actually the whole REIT sector have a huge correction. The REIT index dropped by close to 40%. Actually, that basically a reset. And at the present moment, the rebound actually led by the industrial sector. So there are quite a number of REITs still have not go back to the pre-COVID-19 period yet. That's why there's still a lot of opportunity to be tapped for Singapore REIT. And compared to the STI index, unfortunately, STI, you can see after investing for the past 8 years, is basically still under the under the water. So in short, actually, REIT sector is quite a strong and also defensive asset class for Singapore Stock Exchange. And moving forward, this REIT sector is expected to continue to shine. All right.
Okay. So the gray line, just to confirm, is the STI index.
STI. Yeah, STI index.
And the green line is your FTSE ST REIT. And the blue line is the MSCI one, right? Am I right?
Yeah, the blue line, this one is the Singapore REIT index. This one is a FTSE ST REIT index. There are two different REIT index.
Okay. So which means that if you have invested in that index, say, you've exposed to the REITs inside the index, it's a 250% growth, right? Including the
Dividend.
Distribution, the dividends have been paid out. That's pretty impressive, actually.
Right. Just over the 8 years, right? Later, I show you some of the yield is even more exciting when you see the numbers.
Okay.
Okay, so this I just download this data for, a few weeks ago. Comparing the Singapore REIT sector compared to the rest of the world, because during this period the whole property sector and also REIT industry, it has not been recovered yet. If you compare to Canada, USA, Australia, Hong Kong REIT, Japan REIT, New Zealand REIT, so on and so forth, you just look to a year to date number. Singapore REIT actually rebounded pretty strongly. All right, you can see the rest, they are still double digit down, 24% down, 23% down, 28% down. Singapore is only minus 4% down, right? And the rebound actually helped by all those big cap in Singapore REIT sector, and total number 13 of them, right? And you can see for a past 1 month performance actually is positive compared to the rest. Is still pretty strong, the performance. Okay, and at the present moment, out of this 13, because of the strong rebound, the price to book is 1.2. It's one of the highest amount compared to the rest of the exchange.
So just to probably understand, maybe for the viewers, is price to book one of the metrics you use to value REITs?
Yes, price to book is one of them, because at the end of the day, when we evaluate the REIT, we just have to treat it as a property, right? For property wise, we want to buy property at a discount. We don't want to buy a property at a premium. So we use price to book much more than a P ratio. PE ratio not so applicable. Price to book is more closer representation how to do the valuation on a property counter.
So, which means based on these slides here, Hong Kong REITs and the Australian REITs are, would you say, because it's below one,
Yep,
they are, I put in inverted commas, undervalued? Is that right?
undervalued. Yeah, undervalued.
Okay, okay.
There may be some of the fundamental issue why they're undervalued. Maybe the fund, the institutional fund, they'll come to Singapore first instead of going to other region. So I expect if the whole REIT sector start to recover, the rest of the region you definitely recover. But of course, Singapore REIT will continue to do even better. That means based on compared to all other countries, Singapore REIT is the strongest compared to all other countries. Okay. So why invest in Singapore REIT? All right. I hope you like this one. You know where is the place? Marina Bay. Okay.
Yeah, in fact, our backdrop is also that same picture as well.
Okay, there are few. Okay, REIT stand for Real Estate Investment Trust. Basically, is a basket of the real estate asset aimed at generating the regular investment income. In Singapore itself, the REIT has to distribute more than 90% of the income, rental income, back to the shareholder. So this is mandatory in order to enjoy the tax transparency treatment. This is unlike other stocks, for example, UOB, DBS, and those things. It depends on the management discretion power, how much dividend payout they want to announce. But for REIT itself, this is the rule they must follow. Right? I mean, in others' words, if investor looking for dividend stock which can continue to pay dividend at in the very regular interval and also have a certainty of the dividend payout, REIT is a much better choice compared to other dividend stocks. Okay, and REIT is a collective investment scheme similar to the unit trust and probably traded over the exchange, professionally managed, and in Singapore the debt limit is 50%. Right? That's why the MAS and also SGX do not want the REIT to be over leveraged and also increase the unnecessary risk to the shareholder. So most of the REIT in Singapore, they are actually have a gearing limit less than 40%. There are only a few of them more than 40%.
I see. So, Kenny, just to ask you, maybe from a perspective of investor, would this mean that if I was Singaporean, is my distribution tax free, or do I have to pay tax? Or what about foreigners as well?
Tax free, basically Singaporean tax free, and a foreigner is depends on their own country whether the foreign investment income whether it's taxable or not. It depends on their
I
own
see.
their own country law.
Would you
Okay.
know for Malaysia? Well,
For
for Malaysian
Malay,
viewers tonight, yeah.
so far I think it's tax free, but I'm not sure whether your the Malaysian the finance ministry Ministry of Finance whether they want to tax all this kind of overseas income or not, the dividend.
Ah,
Right?
okay.
Yeah. Okay, but so far I have a Malaysian client. They never come back to me. They mention about it's taxable because whatever dividend when the Malaysian they park the money in Singapore, I don't think they want to bring the money back. Correct. Then whatever dividend have generated from the Singapore investment, you just want to keep in your own bank in Singapore and also keep in your broker. Right.
Okay.
Those are things so far I never see is taxable. Right, but of course, all this kind of professional advice, you probably have to ask your own Malaysia government, have to check it out. All right,
Okay. Thanks.
okay. So why invest in REIT? First of all, it's a highly liquid. Okay, later I will have a comparison table and comparison slide compared to those physical investing, physical property investing, and low investment capital requirement, and also diversified from a traditional investment, for example, bank share, the traditional bond, so on and so forth, and owning a REIT portfolio, okay, allow you to have a very diversified portfolio of property. And minimum investment skill and also knowledge required. It's not like trading. You need to learn about technical analysis, candlestick, chart pattern. Then after look at all the fundamental ratio. There are a lot of work need to be done before you can really trade well. But for REIT investing, basically it's a 包租公包租婆. You just buy it, then after they just wait for dividend come in. Okay,
Landlord
and
and then lady, right?
yeah,
Right.
correct. And one beauty of the REIT investing is inflation hedge, because at the end of the day, underlying is a real estate. Over the long term, as long as a property is at a good location, is a good property, over the long term, the valuation of the property will increase. On another hand, the rental income will increase. Okay, so it's hedged with the inflation, and REIT is very suitable to those investors who focus on the investment income, and they are able to hold long term to wait for the capital appreciation. It's something like holding a property, and of course, the passive income source. Okay, now this is a correlation matrix as REIT versus all other asset class. One of the common question investor will probably ask during the March market crash. Okay, they worry about is this a good time that if Trump lost the election, will the whole market crash again or not? Should I invest in REIT? Okay, so this is a correlation matrix. 1% is highly correlated. Okay, 0 is not correlated, negative is negative correlation. Okay, so if you compare to the US stock market, US bond, the correlation is not pretty strong. Okay, for example, US bond is only 0.63, US equity 0.61, global REIT 0.82, so on and so forth. Global bond 0.62, 65. So it's not highly correlated. So investor can consider S-REIT as one of the asset class for diversification purpose.
Okay. So correlation, you're basically saying that if something happens, does it actually affect REITs as well? But
Right.
in the case for COVID, when the whole world went on lockdown, it was quite affected as well, right? If you look at
Yeah.
yeah.
It is quite affected. Is we need to so this correlation data basically is over the long term. Of
Right.
course,
Okay.
during the event on the day itself, March 23rd, actually we reached a market bottom. When the market crash itself, there are some other factor due to margin call. There's a panic selling. There's a forced sell. Of course, everything will drop
Yeah.
together. But after that being dropped together, the things will recover together. So the
Yeah.
recovery rate for different asset classes, they are quite different. All right. So
Okay.
correlation normally they measure across a certain period.
Cool. Anyway, that was
Okay.
1 in 100 years kind of thing.
Yeah. It's an outlier anyway.
Yeah. It's an outlier.
Yeah,
You're right.
yeah, yeah. So this is a yield comparison versus other asset class in Singapore. At the present moment, in terms of average, 44 S-REIT and property trust, you give us about 6.8%, and STI index the dividend yield about 4.6%. 10-year government bond Singapore yield 0.9%. Fixed D rate is only 0.5%. All right.
Mm.
Okay, so for those investor, Malaysian investor, you have a money in Singapore, instead of parking here, actually you can optimize it, just invest in some of the S-REIT and then to optimize your return.
Okay.
Okay, and this is the yield comparison table for different sector. Healthcare REIT, there are about 3 healthcare REITs. Average yield is about 9.2%. Hospitality 7.5%, office 7.2%, retail 6.9%, diversified REIT 6.4%, industrial is 6.2%, and the data center is pretty overvalued now. Okay, only 2.8%.
Okay.
All right. So as an investor, especially dividend investor who prefer to have a less volatile portfolio for your retirement, this is the distribution. This dividend yield chart versus the volatility chart. Okay, y-axis represent the dividend yield. The higher the number, the better. X-axis represent a 90 days volatility, right? That means how volatile is a price movement. If you compare to the current market condition, actually S-REIT is one of the highest dividend with the less volatility, all right, in this range. This number actually is at the present moment. So it's still one of the best compared to the rest. Just take note here, it's still double digit. But if you compare the chart before the market crash in March. Okay, I took this data from February 2020. You just look at it. It's one of the highest dividend yield and also the lowest volatility. It's single digit. All right. So as an investor, we don't like volatility. We just want our portfolio very stable, less price movement, and every quarter just give us dividend. Okay, then that's good enough. So over the long term, if everything go back to normal pre-COVID level, it is expected Singapore REIT will continue to perform at this kind of so-called volatility and also distribution yield.
So Kenny, I just have a question here from CH Ang here, right? So because obviously these yields are obviously pre-COVID, and I mean at this point I guess it'll still be high, fairly high, especially hospitality, and because the prices have come down
Right.
quite dramatically. What kind of yield adjustment are we actually looking at post COVID-19, right, or where we are today?
Good
Yeah.
question. I would say during this period, we can throw all the yield out of the table. we don't look at the yield because it's really go haywire. And
Yeah.
that's one reason. The other reason is also MAS also allow, and even IRAS in Singapore, Inland Revenue of Singapore, they also allow the REIT itself to delay the dividend payout until the end of the financial year. This one is to help them to have a more cash flow to really tie through this period. So if you look at the yield itself, it's really distorted. And also some of the REIT also may not be able to recover from the current pandemic. For example, there are 2 REIT in Singapore. I never see a REIT lose money and they cannot pay dividend. This is the first time in my whole 10 years of investment in REIT. It's the first time I've seen one of the REIT is really hospitality sector, US hospitality. They are not able to pay dividend because they're losing money for that quarter. The other REIT is not able to pay the coupon, the bond, right, to the shareholder, and end up the creditor process the property and suspended.
Oh
and
gosh,
also the US hospitality. All right.
I
So
see. I
so
see.
things are changing, especially on the hospitality sector. They are affected the most, and whether they are able to recover or after maybe 1 or 2 years, we still is a big question mark. So in terms of the risk, hospitality sector has a higher risk. Of course, at the present moment, hospitality sector also very cheap because
Yeah.
everybody are very scared of that. They are really hugely undervalued.
Yeah. Yeah.
Okay, so what have the Singapore government done to really help the REIT sector? All right. Another reason why the REIT rebounded strongly is I believe that investor also can see the Singapore government commitment to really help the REIT sector and also help the Singapore business. That's the reason that actually the investor have higher confidence come back in the REIT sector itself. Okay, these are the few key things Singapore government, that means through MAS, Monetary Authority of Singapore, and also SGX, and also IRAS. This is a collective effort to really help to support the REIT sector. One of the things that is they increase the gearing from 45% to 50%. This enable the REIT to borrow more money from a creditor or from a bank to tie through that cash flow, right? To have more cash flow to tie through this period instead of issuing additional share to further depress the share price. Okay, another thing is they also defer the minimum interest coverage ratio to January 2022. Okay, and the third thing is the distribution of taxable income. IRAS allow the REIT manager itself to extend up to 12 months so that they do not need to pay out the dividend, the 90% of the taxable income back to the shareholder. They can hold until the end of financial year before they can pay it up. This one also give the flexibility to the REIT manager to manage a cash flow. At the same time, also the bill passed in the parliament to allow a temporary relief for the tenant for inability to perform a contract, so that the all the creditor itself and also a supplier don't continue to sue each other for inability to make a payment, because that when everyone start to sue each other, you make the whole situation worse. And of course, through all the effort itself, because quite a number of REIT in Singapore, they are owned by Temasek, right? Indirectly, they are owned by Singapore government. They are also led by example give the rental rebates, rental waiver, and also property tax rebate back to the tenant. Okay, so these are all the coordinated effort by Singapore government, really to help the REIT sector.
But this applies to Singapore REITs. I mean, specific. What about those who invest overseas, like South Korea, Australia, and all those?
May not. Okay, for some of them, for example, this one is applicable to them, but the rental rebate, of course, not really applicable to them. It depends on REIT whether they want to extend this kind of rebate to them or not.
Sure.
Right? Yeah.
Yeah.
I'm not sure about Malaysia government. Okay, just for you to just do a comparison.
Don't have don't have.
Okay,
also
that may explain why the confidence is coming back to Singapore, right?
Yeah.
Okay, so the difference between investing in physical property and REIT. This is a VivoCity, okay, one of the shopping mall under the Mapletree Commercial Trust. Mapletree Commercial Trust is one of the index component on STI. Objective of investing in REIT, I just want to recap it, all right? So investing in REIT, you enable the regular dividend payout by owning the REITs, and also the payout either by half yearly or quarterly. Holding horizon to be medium to long term. And also, if the investor hold the REIT long enough, there will be potential capital appreciation. I just quickly go through the REIT business model. Okay, there are basically two forms of raising fund from the REIT. One of them, they borrow money from a creditor or from a bank. Okay, when they borrow the money, they cannot exceed 50% of the limit, okay, based on the total asset value. The other form, basically, they are issuing rights, having an IPO, raise fund from all the different shareholders. Okay, once they got all the money, they'll go and buy a property. It depends on the mandate. Some of the mandate, they are allowed to buy the hotel. Some of the mandate, they are able to buy a commercial office, maybe in US, so on and so forth. It very much depends on the mandate. Okay, and after buying all the property, okay, whatever rental income generated, after paying off all the working capital, all the expense, and also interest expense, the remaining 90% of the taxable income, they have to distribute back to the shareholder. Okay, so these are the so-called requirement for the Singapore REIT. Just to answer your question, Alvin, for the business trust itself, there's no such requirement. The 90% requirement is not there. And also the 50% requirement is not there. Right. So you can see that if you want to something safer and something more regulated and also have a better check and balance, of course, Singapore REIT is a better choice compared to the business trust. Okay. Physical property versus REIT. Number one, the transaction value in Singapore itself, typically, if you want to have an investment property, right, easily it costs $500,000. Be it the residential property, for example, shoebox, or the commercial office strata title, industrial factory, warehouse. Okay, you need $500,000. Okay, for a REIT, it's as low as 500. Actually, as low as maybe 100 for the time being. Okay, and the consequences of making an investment mistake is pretty huge. Okay, because of the huge capital outlay, and for REIT itself, investor you just can start with a few $100 to become 包租公包租婆. Okay, landlord lah. All right.
Okay. Yep.
Okay, and number two, if we want to invest in Singapore itself, there are a lot of stamp duty and also a lot of taxes because there are a lot of cooling measures Singapore government to really control the overheating of a Singapore property. So at the entry, I'm using residential as an example. All right, entry we had to pay the 3 to 4% buyer stamp duty. On top of that, the investor also need to pay for 12 to 15% ABSD, additional buyer stamp duty. All these funds have to be in cash. Okay, at the exit, within 3 years, they'll be subjected to 4%, 8%, and 12% seller stamp duty. Besides that, the investors still have to pay for the agent commission, legal fee. When they are holding the property, getting the key, they still have to take care of all the renovation costs before they can rent it out. And they have to pay the property tax, 10% of annual value, rental income tax, maintenance costs, insurance, mortgage. Wow, you can see that there are a lot of costs involved. when you are buying the physical property in Singapore. Of course, the estate planning required, because if the investor did not really plan the estate planning properly, right? Everyone is in the equal share, using the intestate succession act to distribute their wealth, they'll be subjected all this kind of funny that kind of stamp duty. All right, so this is important. So investing in Singapore REIT, basically there is no capital gain tax, no dividend tax, no exit duty. And also commission wise, okay, based on normal brokerage is a minimum 10% is pre-funded or 25%, right? But I believe that I think Poems or Tiger Broker, probably the commission even lower.
Yeah.
Okay, number 3, as a landlord itself, the landlord has to deal with everything. For example, property maintenance, lease management, sourcing for tenant, marketing the property, engaging a lawyer for all the sales and purchase agreement, and also talk to the banker on the financing. Everything, the landlord has to do it by himself. Okay, but for REIT, all these tasks, all this operation issue, all the financing issue, everything to be done by the REIT manager, trustee, and also property manager. Investor do not really need to worry too much on all the things here. Okay, so it's more or less hassle-free. Number 4, portfolio diversification. If you, for example, if you're buying the property in Singapore or really in Malaysia, we can only own maybe 2 or 3 property. All right, but for when you are holding a REIT, you have the whole world for you to invest in. Later, I'll share with you some example how to invest in the whole world. It's very easy for you to spend a few thousand to own 1,000 property around the world. It's very easy. So those advertisement on the Facebook, you can see that very minimum down payment to own 1,000 property. Yes, can be done through REIT. You can do it. Okay. Yeah, in terms of yield, in Singapore context itself, residential property, the yield is between 2 to 3%, is pretty low. On those strata title, commercial, shop lot, factory, warehouse is between 4 to 6%. And also because after we getting a key, there will be a certain period that probably we cannot get a tenant. Then we are not able to really generate any rental income. At the same time, we have to pay for all the mortgage. So the income is pretty unpredictable. But for REIT itself, between 4 to 10%. After you buy the REITs, as long as you can wait until 1 quarter or 2 quarter later, you definitely get a dividend. Okay, and during a normal time, the dividend is pretty stable and also quite predictable. Average, in terms of leverage, and also using Singapore context, is loan to valuation up to 75% for residential property. And the residential loan interest at the present moment in Singapore is pretty low. By the way, just for information, about 1.2%. Okay, using the leverage, return on investment can be up to 10%. But for REIT, if the investor have the private banker and you know that the broker who can offer the margin financing, you are able to really boost up your return up to 20%. But just word of caution first, there will be a risk of margin call if you do not know how to manage it properly. All right, Edwin, do you have any question? I drink some water first.
We have quite a lot of questions here, actually.
Okay, now let me.
Yeah. More, okay?
Yeah, let me continue finish it, right? Because some of the question, maybe some of the slide I can answer in some of the slides.
Okay, we'll let you guys. We'll let you finish first, and then those of you who have posted questions, we will definitely get to it. Just keep posting those questions.
Yep. So some of the examples of the property owned by the S-REIT. Okay, this will be exciting. So in typically there are 5 sectors in Singapore. We have the industrial and also logistics sector. We also have a commercial office, retail mall, mainly on a shopping mall on the suburban or on the Orchard Road. Okay, Orchard Road, those belongs to all the luxury mall. And we also have a hospitality sector, comprises of the hotels and also service apartment. And we also have a healthcare sector. Okay, some of the REIT have the hospital, nursing home, in Singapore. Okay. First example is a shopping mall in Singapore. If you believe in Singapore, shopping mall basically is a no-brainer because Singapore is just too small, and especially during this lockdown, we got no place to go. The only place we can go is a shopping mall. So shopping mall after the lifting of circuit breaker, some of the shopping mall, especially at the heartland where we stay, are basically doing very well. Okay, so Capital Land Mall Trust is the second largest or third largest in Singapore for the time being. It has been listed in since 2002. It has been doing very well. Okay, at the present moment, this CMT have about 15 more across the whole Singapore. Okay, if you don't like the mall in Singapore, you want to have some higher yield. Okay, Indonesia, Lipo Mall Indonesia Retail Trust, have about 30 property across the whole Indonesia. They have the retail mall in Sumatra, Java, Bali, Sulawesi, and this street at the moment is giving you 10% dividend yield. Okay, if you don't like Indonesia, you prefer to invest in the mall in China because you believe in China, and especially during this period, they are controlling all the COVID-19 pretty well, and you have a long-term bullish view on China. Then you can look for those REIT have a China exposure. For example, in this case, BHG Mall. Okay, if you want to diversify your portfolio to maybe a hospital sector, healthcare sector, First Street give you the exposure to the hospital. There are quite a number of hospitals in Indonesia. At the same time, they have a few nursing homes in Singapore and also one private doctor hospital in South Korea. Okay, this is the First Street. Okay, if you want to invest in a commercial grade A office in Singapore, because no way for us as a retail investor, you can own this kind of grade A office. But if you invest in Capital REIT, at least you own a toilet bowl. Minimum, you can own a toilet bowl or the toilet. It depends how much amount you want to invest. So we can own something at a CBD area, grade A office. All right. This is the beauty of a REIT. So if you don't want Singapore, you want to have some exposure to US, basically Manulife US REIT, give you exposure. And one of their 10 building they host US Federal Reserve, right? Okay, if you want to have exposure to Europe or Germany, okay, iREIT Global have the campus in Germany and also a commercial office in Germany. UK, a popular destination for especially for the Malaysian and also Singapore investor. Now the good news is Elite Commercial REIT, okay, just newly listed. They have exposure to all the commercial office in UK. So we do not really need to fly all the way there to really look for a property to invest. And the yield for this Elite Commercial REIT is between 6 to 7%. It is also pretty decent.
Cool.
And the tenant, 99% of them are actually the tenanted, the rented out to the UK government. Okay, if you want to have a more diversified portfolio across the whole Europe, okay, you can access through Cromwell European REIT. They have around 94 freehold property across the 7 European countries. They have a property in Finland, Poland, Denmark, Netherlands, Germany, Italy, and France. Okay, if you think that it's too high risk to invest in the overseas because they're subjected to the forex, and you just want to have more exposure to the Singapore industrial, you can access through the Ascender Street. Ascender Street is currently the largest Singapore industrial REIT and also the largest market cap REIT in Singapore. If you like Australia very much, you can access through Fraser Logistics and Commercial. They have 65 property in Australia, about 2 in Singapore, and 26 in Germany, so on and so forth. Okay, if you think that the industrial building, factory, warehouse, not atas enough. You want something more atas. You want some premium hotel. You can own Escort Resident Trust. They are currently this Escort REIT. They are having quite a number of premium hotel around the world. Well, of course, this belongs to the hospitality sector. At the present moment, this REIT, the share price is really hugely beaten down. due to COVID-19. But if you have a long-term view on this Ascott Resident Trust and you believe in them, you believe the COVID-19 will go away, the whole travel industry recover. Okay, this may be a REIT you can consider. By the way, this Ascott Resident Trust belongs to Capital Mall. Okay, Singapore has been doing pretty well in containing the COVID-19. All right, so it is expected the hotel sector, those REIT with the Singapore hotel is expected to do well, and also Singapore government encourage staycation. So Far East Hospitality Trust have 100% property and hotel in Singapore, no foreign exposure. So and if you read some of the analyst report, okay, it is expected the Far East Hospitality Trust you have a better result in the coming earnings. Okay, if you want to own the hotel overseas, you don't have a chance to go to Maldives, all right, but at least you can own something in Maldives. You can you can invest in CDL Hospitality Trust. All right. Okay, so Elvin, do you have any questions before I move on?
There's quite a few. Do you have a lot more slides here? I'm just curious.
A few about 10 more slides. Okay.
10 more slides. I think you can run the 10 more slides, and then we'll do the questions one off.
Yeah. So if you love or like Singapore REIT, you think that is a good asset class for you to diversify a portfolio, all right, I'll go through some of the investing opportunity. So investing in REIT basically allow the investor to own a portfolio of diversified property, and the property can be different from different sector, and also it can be at different location, all right, and you do not really need to manage all those things. Okay, and this is an example of a portfolio of all the Singapore REIT. There are currently total, I think, close to 26 REITs have a property in Singapore, right? If you are investing in all of them, okay, basically you can own part of a Singapore. Total, there will be a 453 property of in Singapore from different sector. It has the shopping malls, hotel, offices, logistic, industrial, data center, and so on and so forth.
So basically creating your own index, your own REITs index.
Yeah. Right.
Actually, for those of you, Kenny is actually sharing this slide as well. So if you want to download it, you can.
Okay. Yeah. So if you don't want want something more specialized, you want something more atas, no problem. You also can own the whole Orchard Road, the whole Orchard Road. Okay. This one basically I just list down the REIT actually along the whole Orchard Road. If you have time to come to Singapore again, actually you can spend some time. You walk from Tanglin to the Bencoolen MRT. Just walk from this side to this side. You along the way you can see the Gleneagles Hospital. This is a private hospital, right? Private Gleneagles Hospital belongs to Parkway Life REIT. And also after that, you walk past Far East Hospitality Trust, all right, which own the Orchard Rendezvous and Orchard Hotel. Okay, Orchard Hotel owned by CTL Hospitality Trust. When you're near to the Orchard MRT, you can see that Wisma Atria, Nia City, Takashimaya is at a Nia City, and opposite Nia City there's a Paragon owned by SPS REIT, and also next to Paragon you have a Mount E Hospital owned by the Parkway Life. Right along the way, you can see Ascott Orchard, Mandarin Gallery, 313 Somerset, the Atrium, Plaza Singapura, and also the 9 Penang Road and Rendezvous Hotel. Okay, basically you can see that there are close to 10 REIT that have a portfolio on the Orchard Road. All right, this is the so-called premium combination for you to own. But of course, during this period, lack of the tourists, basically some of the REIT over here, basically they're affected a lot. So I summarize the benefit and also the strength of owning a Singapore REIT portfolio. Okay, basically, Singapore as a nation is stable. Okay, in terms of politics, we have a strong, clean, and credible government. And also, we are having the international neutral stance. We don't cite China, and we also don't cite US. So, and in addition to that, the AAA sovereign credit rating also help the strength of a Singapore dollar. Okay, and also Singapore as one of the global financial hub and also wealth management center, you attract a lot of global investors come to Singapore to invest, and we also have a transparent and also complete legal system, well-regulated wealth management and also financial service system. Okay, and investing in a Singapore REIT portfolio enable the investor to participate in the economic growth in all aspects. Okay, that's why you participate in the Singapore long-term economic growth and also economic transformation. And of course, the last thing is Singapore as a country, we are pretty small. When they're pretty small, basically every land is very precious. So investing here, the property value will be preserved and also the land value will be preserved. And by the way, this slide actually I also share with all the global investors. Okay, and some of you, I hope this chart is very familiar to most of you. This is the exchange rate of the SGD and also Malaysia ringgit. Okay, I will treat it as investing in Singapore basically is your asset preservation. Right, over the long term, it is expected the Sing dollar to be continue to be strengthened because this is one of the goal of the MAS. They want Sing dollar to be strong, so to control the inflation. So over the long term, Sing dollar is expected to be on the upward trend. And if you think that you want to further diversify your portfolio to globally, okay, this is a global diversified REIT portfolio. By investing in all the REIT over here and enable the investor to own up to 995 property around the world. So if you want to invest in US, you can look for Manulife US REIT, Prime US REIT, United Hemisphere Retail REIT. Those are the US combination traded in USD. So if you have additional or excess US dollar, don't know what to do, right? Instead of sitting down there having the 0 point something percent interest rate, must you invest in those REIT. Quite a number of REIT are giving you the dividend 5, 6, 7, 8, 9%. All right. And also if you have access euro, don't know what to do. Okay, there are quite a number of REIT actually traded in euro. Okay, one of them is Cromwell traded in euro. The other one is a Elite commercial trust, commercial REIT. Just I mentioned it already. Actually, they are traded in a British pound. So if you're either British pound, you can also consider that. Okay, if you want to join, invest in China, invest in Japan, and also Australia, there are plenty of for choices also. This is the report from JP Morgan. I just got it a few months back. JP Morgan did a comparison from different asset class over the 20 years. So this is a 20 years annualized return by asset class. As you can see from her, the total return for the REIT itself over the past 20 years is 11.6. It's much more better to the rest of the asset class. For example, gold 8.6%, S&P 500, 60-40 combination, that means 60% equity, 40% bond, 40% equity, 60% bonds, and also oil, and so on and so forth.
I think JP Morgan missed out Bitcoin.
Yeah. Go on. Okay, so this is my last slide. Okay, summary: 5 reasons for investing in Singapore REIT. Okay, the first reason, invest in one of the best performing asset class. Right, you have seen that REIT is one of the asset class, and also Singapore REIT itself is also one of the best performing REIT in the whole world. Okay, so the politically stable of Singapore as a nation. Okay, because investor like stability. Investor don't like any volatility, don't like any political risk and those things. Okay, because all those things you can affect that investment. And the strength and the stability of a Sing dollar, you don't see the very volatile Sing dollar as compared to other emerging market currency in the region. And also Singapore offers the investor a place to diversify your investment and also manage a risk in terms of political risk, forex risk, geographical risk, and also we also have a very well-regulated financial system. All right. So that's all for my whole presentation of my REIT introduction. All right. So I hand over back to you, Elvin.
Ken, all right. So I'll sort of start the questions rolling. So earlier you talked about some of the measures that the Singapore government is doing to allow REITs to borrow above their 50% rate temporarily. So the question came from CH Ang, but I think he typed in a bit wrongly, but it's all right. I'll kind of summarize it for you. Basically, he's saying that if they're allowed to borrow during this difficult period, are we expecting interest costs to also go up and therefore dividends to also come down, which means the yields will
Okay,
come down?
so will not be have any impact because at the present moment, uh, they are able to borrow, but at the same time, we are in the ultra low interest environment. Okay, so allowing them to borrow more, basically they can raise more fund from a different creditor and also different banks. Okay, and definitely will not increase the interest cost. Okay, provided financially they are still strong and their credit rating is not affected. Okay,
Okay,
and
okay.
also at the present moment, for those REIT which has a shorter lease expiry profile, that means that their debt is going to mature in the next 1 or 2 years. Actually, is a good opportunity for the REIT to go and refinance at a lower interest. When they are able to refinance at a lower interest, they are able to help increase the dividend.
Okay, okay. So I've got one other question here that's coming. So Lim here is asking, what are the exact 6 REITs that only hold property in SG?
Wow, you're
What
testing
I
my
think remember
memory.
you had one slide somewhere there, right?
Right. I know what's that. Okay, you're testing
Uh,
my memory. Okay,
yeah,
let me
yeah.
see. Let me see. Let me can recall. Far East Hospitality is one of them.
Far East, okay.
Okay, I think Sabana is another one.
How to spell it?
Sabana Sharia compliant REITs. Can you see? Can
Oh,
we see my
Sabana,
mouse
yep,
here?
okay, yep.
Right. Okay, if I'm not mistaken, I'm
Uh,
I'm I'm just using my memory.
sure,
Uh, SPH REITs. I think the third one.
okay.
Yeah, the rest I can't remember because some of them,
Okay.
although majority of them, they are holding a Singapore property at the present moment. Sometimes they just go to Australia to buy one, go to UK to buy one.
Yeah,
Ah,
yeah, yeah.
right.
Okay, okay, okay.
Yeah.
Got it. Yeah. Okay. I'm just typing it out for Lim here.
Mm,
Okay. Now this is specific to a REIT ETF, right? Um. Can you share a little bit more about the REIT ETF? I think there's one listed on the SGX, right?
there are total 3 REIT ETF listed in SGX. One of them, if I'm not mistaken, is a Lion Philip REIT ETF. They are holding 100% REIT portfolio, a Singapore REIT, 100%. And the other one is the, I think, APEC X Dividend, something like that. Part of it Singapore REIT, part of it Australia REIT, and also some small percentage on a Hong Kong REIT. The third one will be Hong Kong and Singapore. So they are basically 3 REIT ETF in Singapore. It depends on which so-called country you prefer the most. If you
And
just
they pay dividends as
100%,
well, right?
they
Sorry.
pay dividend. They pay dividend also, right?
Okay. 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 This one, I'm not sure how you can kind of answer it in a very educational manner, and that's not financial advice, right? So the
Okay.
question here is, what is the outlook for Fraser's commercial trust, and do you think REITs are most promising? I mean,
Yeah.
you spend a lot of time focusing on REITs.
Anyway, this answer is this question is very easy to answer. FCT no longer exists.
Okay. What
No
happened to
outlook.
FTT?
Already merged into Fraser Logistic and Commercial.
Ah, okay, okay,
Okay, because originally Fraser, okay, basically there is a merger of Fraser Logistic and Industrial, and FCT merged into Fraser Logistic and Industrial. Now they call it Fraser Logistic and Commercial.
okay, okay. So it's Fraser Logistic and Commercial lah.
Commercial.
Okay.
So this REIT itself, inside the REIT, they have a portfolio of industrial building. They have a warehouse, they have logistic center, and they also have a commercial office. So it's a very diversified that kind of REIT.
So
Right.
do you think REITs are promising over the next 6 months?
For FLCT, because they have an element on the industrial. At the present moment, in the industrial sector is the best performing sector because they are the most resilient during this COVID-19. We can see for all the earnings, they are least impacted. And the retail sector and also hospitality sector, they are cutting dividend. For the industrial sector, they are not much of, or although they are impacted a little bit, but they are not as severe as those other sector.
Okay, so I mean, maybe to kind of answer a question it the other way, do you have like a top 10 REITs on the back of your mind that that's something that you really like right now?
Yeah, I have a top 20 REITs under my watch list when I do my REIT advisory for my client. But yeah, cannot be shared in the public because otherwise you become advisory.
Okay, so in Kong, you know what to do, right? Go and call Kenny, right? Okay, this is from YouTube. What is the typical REIT manager's fee? Do you know?
Wow, this one have to take information, right? Normally the REIT itself, if you look at their annual report, they always disclose how much they charge when they buy or sell a property, and every quarter how much they charge. You can find it on the annual report. I don't have a number.
Okay, thank you. Okay, I'm not sure about this. Are REITs also subject to the same stamp duties or also tax free?
No, REIT under different tax structure is not the individual. Why the Singapore government come out all this kind of cooling measure is to curb all those speculation, that kind of property investing. So when all those REIT when they do the acquisition itself, they are go under different structure so that they can they can have a proper tax planning, okay, more tax efficient.
Okay. Okay, so Keppel DC, if I'm not mistaken, is the industrial
It's a data center,
data center
100%.
REIT, right?
Yep.
Is Ascenda their competitor?
Not direct. Okay, so when data Keppel DC, when they firstly IPO, they're 100% data center, and it has been doing pretty well for many years since the IPO. At the present moment, the Keppel data center, the price to book is 2.5 times. It's pretty
Wow.
expensive. It's the most expensive REIT in Singapore in terms of price to book. So why they are very expensive? Because the data center tends to be traded at a premium. So the next in line that the REIT have more data center would be the Mapletree Industrial Trust. Mapletree Industrial Trust, they also recently changed a mandate. They start to acquire more and more data center into the portfolio. After the data center being acquired, the portfolio, the price to book now for Mapletree Industrial go up to 2.
Wow.
Wow, it's 2. Okay, so the third one, Ascenders also have a data center, but I think that in terms of percentage, this is pretty low. It's single digit. So I think that if moving forward, Ascenders they want to acquire more data center, I would think that actually there will be a re-rating on the price to book. So at the present moment, quite a number of industrial REIT they are eyeing a data center. So that can be next growth, right? And also next potential re-rating of the industrial sector.
So actually, this is from the same viewer, Darren, as well. So he also talked about Mapletree Industrial and Mapletree Log, right? Maybe what's the difference? And are they almost similar? Because you said that they changed their mandate, right? Which one was it? That was it Mapletree Industrial Trust?
Industrial, they have a data center, and Mapletree continue to stay with the logistic and warehouse.
Okay, got it. So I got a question here from Brendan Su. What's the difference in terms of business model between Fraser's and Centrepoint and Sheng Siong?
Okay. One is landlord, one is tenant. Okay, it's a very simple form. Fraser, Centrepoint Trust, basically they are acquiring all the property and they're going to find a tenant. The tenant can be Sheng Siong. Right, Sheng Siong is just a supermarket operator. Of course, they also buy their own property. If one day they think that Sheng Siong want to change their business model, they say that they want to be asset light, they don't want to own their property, and they prefer go and rent. Sheng Siong can go to Fraser Centrepoint. I want to rent your place to become my supermarket. Okay, but of course, I don't think Sheng Siong you're going to rent the Fraser Centrepoint because Fraser Centrepoint Trust is more artistic kind of environment. So they rent it maybe to cold storage, NTUC fair price, right?
Okay. I think you already answered this. Which REITs have a bigger portfolio in data centers? I guess it would be Capital DC
Capital DC, correct.
would be the biggest one, right?
Yep.
Followed by Ascendas, and then now upcoming using Maple Tree.
Yeah. No, second is a Maple Tree Industrial Trust.
Oh, that's the second. So Maple Tree
Yeah.
Industrial Trust has a bigger. Would you
Yeah.
know the rough percentage in terms of data center?
I have the number somewhere, I think in my blog. I did a study to on the number, some percentage. I cannot remember. Maple Tree Industrial is a double digit, I think 20 or 30%, something like that. I think Ascendas about 10, below 10, something like that. Okay, if you go and look at the individual REIT presentation file, you should be able to see what is the percentage on the data center in their portfolio. You can go to the website, you can see that, you can find the information.
Okay. Now this is quite an interesting one. So in an event that you talked about just now the two US REITs that was unable to pay their coupon and or their bonds, right? Essentially. So what will happen normally when REIT goes insolvent?
Okay, so far, no REIT has been insolvent yet. That's why I do not know what would be the actual outcome. But in theory, because at the end of the day, the underlying is a real estate. In theory, if they liquidate all the asset, and they should have some residual go back to the investor based on the book value. Because the property will not vanish overnight, not like business. Business can vanish. Then after that, whatever assets you left over, as long as there's no buyer to buy, your asset basically worthless. But for REIT itself, if you are holding a good premium hotel, if you're having a good premium mall in a good location, somehow somebody you're gonna come and take over to buy over or take over the REIT. Or maybe they can sell the individual property away to pay off all the debt, and then REIT can continue to survive.
Yeah, I think a REIT complete bankruptcy is not easy. Not easy
Yeah,
to happen.
not easy, not easy.
Yeah.
Especially when they because you can see the gearing ratio is 50, right? That is 50, then it's very unlikely that the value will go zero. Because if your basically price to book, for example, your price to book is trading at maybe 0.5. It's basically 50% discount to your book value, right? If someone just take over and privatize it, and they sell all the property individually, they also can get higher valuation.
Okay. Okay, so I have Eric Lim here asking, can you recommend some SG REITs? I mean, you cover 40 over, right? I mean, what's
Yeah. You can do the study, pro and cons on. I can tell you the sector, but no individual REIT name will be mentioned, right? Because we don't want to step into the advisory issue, right? Compliance issue, no choice. So in terms of, if you're looking for the consistent payout of dividend, right? You are playing for dividend. You are investing for dividend. You stay with those healthcare sector, okay, and also stay with those industrial sector and some of the commercial office sector, because based on the past earnings result, dividend payout is quite resilient. They are not really impacted too much by the COVID-19. So this is a dividend play. If you want to have a capital gain play, then you look for those REIT which is beaten down, very undervalued due to the fear of a COVID-19 damage. All right. So there are quite a number of sector. For example, the hospitality sector, the price to book is pretty attractive. It's unbelievable low. And also some of the retail mall and the price to book is very attractive compared to the historical average.
Thank you. That really narrows it down, to be honest. Much easier. All right. Okay, I think you already answered which three sectors I'm looking at. So just to repeat, industrial, healthcare, offices, and potentially some mall REITs, which are quite battered down right now. Okay, this is quite interesting. From Wyman Cheong, what is your view on private placement in REITs? I mean, is it a common thing in Singapore?
Yeah, it's getting more and more common now. There are three ways. Okay, just now I mentioned there are two ways of raising fund. One of them is basically you issue bond, borrow from a bank. That will have a gearing ratio. Okay, the other way is basically issue additional shares through the IPO or right issue. When the private placement belongs to the second category, that means issuing additional shares. When you issue the additional share, you can issue to the existing shareholder, or you can look for the so-called private investor to invest into it. So private placement is the fastest ways to raise capital. Sometimes the REIT manager itself, after they identify some of the very attractive property to buy, if they want to strike the deal in a very quick manner, and at the same time they don't want to alert all the competitors to come into bid, they'll go for private placement. So private placement, if they are able to identify a good property, private placement is a much better way for the REIT manager to go. But on another hand, this is a disadvantage to the existing shareholder, because whenever they issue the private placement, they always offer the discounted price to the market price to the new investor. That will cause also dilution of share and also dilution of the dividend. Retail investor no way to participate. It's always at a loose end.
Well, no choice, basically.
Yeah, no choice.
if you're a retail investor, too bad, right?
Yeah.
Yeah, too bad. Right. Okay. Maybe I'll cover so I've got a few more questions coming in. Maybe I'll do a last two. Now, Kenny, have you done a return for Singapore REITs only, European REIT versus US REIT? You know, which kind of gave a better return, say, over the last 8 years that you mentioned about, or 10 years?
Okay. I have some data on the previous presentation, but I did not do the comparison recently. All right. So for US REIT itself, you definitely out. Totally, I am not looking at US REIT. The reason being is because my focus is more on dividend investing. When I invest in REIT, I focus on dividend instead of growth. If I want to play growth, I will be investing in the technology stocks. So different strategy. So if you want to invest in US REIT, there are two disadvantages. All right. The first disadvantage is all the dividend you'll be subjected to 30% withholding tax. That's one thing. The second thing is holding the US stock, you're also subject to the inheritance tax. Okay, when we pass away. So I think the inheritance tax can be up to 40%. It is crazy. So if you don't do the asset planning properly when holding the US stock base, basically over the long term itself, you'll be losing money, because I don't think your beneficiary, they want to pay the estate duty first before you inherit all your shares. So for investor, these are the two major things you have to consider when you invest in all those European stocks and also US stocks. So in short, for me, I do not want to be exposed all those uncertainty. For me, I just stick with Singapore REIT.
Kenny, I think when they mean so SGX listed REITs, but those that are based in Australia, I mean, focus they buy property in Australia. Those in Europe, and those who buy in US.
Yeah.
I mean, yeah, maybe that's probably I think where they're coming from.
That question will be different already. Okay.
Yeah, correct. Very
Yeah.
different answer, right?
Yeah, very different. Okay, if that is your question, basically all Singapore REIT, all REIT listed in Singapore, but having different property in
Yes.
Singapore,
Portfolio.
Australia, and also in US. Okay,
Yeah.
in general, it's all based on the risk element. For those REIT with have a high percentage of a Singapore property, the yield tend to be lower. Okay, the reason being is because there's no forex risk, there's no country risk, right? And also everything in Singapore we can see, we can feel because it's well regulated. There are less hanky panky thing happening lah. Okay, so when they are the REIT have overseas exposure, they will be immediately exposed to the forex risk, right? For example, euro was against Singapore, US against Singapore, and those things, right? And also because of a lot of tax issue, sometimes they just change the regulation and those things. Those are uncontrollable. So in terms of the risk appetite itself, typical Singaporean and also PR, whoever stay in Singapore one, they have a less risk appetite to invest in those REIT we have an overseas exposure. But to me, I feel that there's an opportunity because the yield is tend to be higher.
Okay. Thank you. So I guess that's the I mean, I think there will, in terms of return, they'll be higher lah. That's what you're saying. I mean,
Yeah,
in terms
yeah.
of historical yields.
Yeah.
Okay,
Just an example, I just quote some yield for reference. For
Yeah.
example, the Maple Tree Industrial, Maple Tree Logistic, and also Ascenders, with a big sponsor, the yield is about 3 to 4%, 3-4-5%. For those industrial REIT, for example, Cromwell, you can close to 8%. You can see the difference.
Wow. Okay. Okay, Kenny, look, thank you all for tuning in and watching in. We're kind of almost 1.5 hours already, so I'd like to thank everyone and Kenny, of course. Let's give a big applause to Kenny. Thank you very much for spending your 1.5 hours, with us. If you guys can comment section and say thanks, Kenny, that'll be fantastic. Now, Kenny has some of those slides up. You can actually download it. So at 603-8408-2070, right? Via WhatsApp. Just send us a WhatsApp and then you can download it. Click on number 4. All the details are there. You can also get a lot of the SGX resources. Don't forget to also tune in to our SGX online ET online campus for SGX, right? Of course, there are also analyst resources, analyst research, SGX Invest. You can get all this also from our WhatsApp. Because I think if you're watching from phone, you can't take the QR code anyway. Now, for those of you who don't have an SGX account yet, you can do an online one. It's very simple. Go to poems.com.sg or tigerbrokers.com.sg just to set up a direct broking account, and you can do that all online from the comfort of your own home. Of course, if you already are with a Malaysian Malaysian broker, they also can facilitate your SGX trade as well. Yeah, so all this is there. You can actually download it. Just remember to send us a WhatsApp at 8408-2070. First of all, thanks again, Kenny, for being here. For those of you, tomorrow's session will be in Mandarin. So do join us on our Mandarin Kopi Time tomorrow. Thursday, Andrew will be back with Future Proof, where we'll be talking about Udemy, right? So if you're interested about how online learning has transformed and what is happening going forward with tech and future, do join us for Thursday at 8 p.m. again. All right. Don't forget, on Friday, 11 a.m., we have our ET Club meeting. Well, Paul will be joining us 11 a.m., right? So those of you working, right, you might have to take an early lunch. Okay, early lunch, right? Since you're working from home. And also on Saturday itself at 3 o'clock, we have Solar Vest coming to talk about their company as well, right? So thank you very much, all of you guys here, for joining us tonight. See you guys on tomorrow, or don't forget to tune in tomorrow or Thursday. Don't forget like, subscribe, and follow. Of course, you can also download Kenny's slides on our WhatsApp number. Thanks again, Kenny. Everyone else, thank you very much for being here. Good night and goodbye.